So why is global demand for gold falling while it's rising in China, and why is global production falling? I put that to the CEO of research firm Sunshine Profits, Przemyslaw Radomski.
The gold production is declining, and there could be many reasons for that. One of the reasons is negative change in government policies regarding mining in the developing countries such as South Africa. Well, another factor plays an important role, more important role here. The decline in gold production could, to a large extent, be explained by the lack of sustained rally in gold. We haven't seen any of that in the last few years. The price have been moving back and forth without new highs. Consequently, gold producers are not fully driving the price of gold, and they have to adjust to the current business environment. And in the current business environment, well, the price of gold hasn't done much.
I mentioned in our report that most of China's gold consumption is actually going toward jewelry. Analysts tracking this say China's second and third tier cities are actually driving a lot of this growth. How does China influence the global gold market?
Based on the report from the World Gold Council, the share of China in the gold market is huge. However, generally the gold demand and the gold supply reported by the World Gold Council is only a tiny fraction of gold that is traded in a year. And the largest marketplaces for gold in the world are London and New York. And these markets are where the price of gold is formed. So although the share of Chinese investors operating on these markets is unknown, we believe that, well, we at Sunshine Profits, we believe that Western investors, or at least Western institutions, remain the key players in the gold market. The price of gold is not really shaped by stocks of gold, but by flows of gold. So it behaves in a way just like a currency, instead of being traded just like a commodity. Well, essentially it is a commodity, but that's not how its price reacts to various drivers.
You were just talking about the price of gold. It hit a high in 2011 of nearly $1,900 per ounce. Earlier this year, it's selling about $1,300 per ounce. Today, it's just under that mark. How do you see that changing in the years ahead, and how can the Chinese market influence that?
Well, I think that the main two drivers of the gold price remain the US dollar index, meaning the currency market, and the real interest rates in the US. And the Chinese gold market, demand, supply, and even the reserves that the foreign reserves that are kept in the form of gold are not directly related to any of those two factors. So the role will probably not be as huge as it may seem based on the yearly supply and demand from China.
Przemyslaw Radomski, thanks so much for your time.
Thank you.